Well, the dodo birds in Washington are at it again. Some of the officials there are just now coming to the realization that the housing market issues are real, while others may be trying to buy your vote this year with new giveaway ideas. Welcome to our channel. Today we are trying to make sense of the timing of the Fed chair's confessions and why policymakers think that more free money handouts are going to kill the pain. This is Real Estate Rundown. Here we go. Jerome Powell, the Federal Reserve Chair, recently stood before the Senate Banking Committee, painting a dark picture of a housing market in distress. Despite the outcry for interest rate cuts, Powell's testimony revealed a deeper problem that a simple monetary policy adjustment cannot fix. The market is not just struggling, it is caught up in a complex web of challenges that have evolved over the course of years, with each layer adding to the difficulty of finding a way out. At the heart of the crisis is an absurd situation. Nearly 90% of homeowners are locked into mortgages with rates below 6%. This figure is a distinct contrast with what the market rates are today, as they hover around 7%. This disparity has created the lock-in effect, where homeowners are not motivated to move, leading to a historically low supply of existing homes for sale. Low inventory is the fuel that pushes up the prices of available homes, further exacerbating the affordability crisis.
Interest rates are pushing home ownership further out of reach for families hoping to buy their first home, move for a job, or buy a bigger home as their family grows. They're forced to keep renting or to turn down job offers. Homeowners keep their homes off the market because they feel trapped by current interest rates. That keeps the supply low and drives up prices more. Meanwhile, all cash buyers, including out-of-state investors, fueled by cheap Wall Street cash, drive home prices higher by buying the few homes that do come on the market. High rates make it harder to build more homes and add housing options, which would bring down prices. It's why I've called for the Fed to bring down interest rates. Ohioans worrying about housing costs can't wait any longer. We see more and more renters and homeowners in my state and across the country whose only option is to pay more than they can afford for housing. Because rents keep rising faster than paychecks, high costs have pushed even more families, including parents working full-time jobs, into homelessness. This isn't just happening in the big cities or on the coast. It's happening in every state, in cities and suburbs, and small towns and rural communities.
The roots of this problem go back over a decade, when America was dealing with the aftermath of the global financial crisis. The economic turmoil back then led to a cautious retreat from home builders as new construction slowed down a lot. This hesitancy set a precedent of undersupply that has persisted, leaving us with a shortage of housing units in the millions. Then there was the pandemic, which intensified the problem, with high inflation driving up the costs of materials and labor, and surging mortgage rates caused sales to tank. The result is a market where the supply of available housing is alarmingly low, with only 3.2 months of inventory available at the end of last year, far from what is needed for a balanced market. The Federal Reserve's potential rate cuts loom on the horizon, offering a glimmer of hope for some short-term relief. However, these measures are just a band-aid on a deep wound. The underlying issues continue to be a drag on the market. From restrictive zoning laws to the reluctance of homeowners to move and free up existing housing, the problems persist, creating a bottleneck that new rate cuts alone cannot alleviate. Powell's testimony underscores a critical balancing act. The housing market is a significant driver of the domestic economy, and its stability is critical. Yet the path forward is fraught with complexity, as the Federal Reserve has the delicate task of adjusting interest rates without destabilizing the broader economic environment. So which way do we go from here? The decisions of today will shape the opportunities of tomorrow and will touch the lives of millions, from first-time home buyers to seasoned investors, all waiting to see how this chapter of economic history will play out. In this shuffle of supply and demand, interest rates, and economic policy, one thing remains clear. The path to resolving the housing market's challenges is complicated for sure. It requires a very nuanced understanding of the relationship between all the various factors and a commitment to addressing the basic causes of the shortage. All right. Well, don't look now, but in an ambitious move to address these challenges, our delusional government has unveiled a questionable new housing affordability proposal aimed at encouraging homeowners to sell their properties. This initiative is designed to inject more action into the stagnant housing market. It offers an intriguing incentive that some folks may find particularly attractive, but will it potentially shift the dynamics of homeownership and procure more real estate transactions across the nation? At the core of the proposal is a significant tax credit, a financial enticement aimed at breaking the so-called golden handcuffs that have kept homeowners from selling. As we've said before, many homeowners with low interest rates have been reluctant to enter the market as sellers, fearing the financial crunch of purchasing a new home at higher interest rates. This hesitancy is a significant contributor to the low inventory and shortage of available homes for sale. The government's proposal seeks to reduce these concerns by offering a $10,000 tax credit to homeowners who decide to sell their homes. This election year initiative is not just about stimulating sales, it's about creating movement in a market that has been frustratingly static. The credit is meant to give homeowners the push they might need to sell their starter homes and free up more opportunities for first-time buyers to enter the market as more homes go up for sale. The plan also includes a $5,000 tax credit for those first-timers to help offset the high cost of obtaining a mortgage. Some say that the proposal doesn't seriously address the need for entry-level homes in markets where consumers want to live. So the critics and proponents alike are watching closely and debating the potential impacts of this policy. Will it lead to a surge in home sales? Could it inadvertently drive up prices in an already expensive market? Or will it be the catalyst needed to break the cycle of low inventory and high prices, paving the way for a more balanced and accessible housing market? Reading between the lines, the credit to sellers could loosen up the housing supply at the low end, as some of those folks move out of starter homes, but combined with those homebuyer credits, the whole thing could likely be a big boost for housing demand, getting more folks into the real estate market and ultimately juicing prices up again. The credits are a way to boost sales, not improve affordability, says Daryl Fairweather, chief economist at Redfin. This is a way to lessen the impact of the high-rate environment on the real estate industry, because even as the rest of the economy has rebounded and is growing, real estate is hurting. Following the money, the tax credits are getting a lot of attention. But the housing proposal also includes measures that more directly address affordability. Also built into the proposal is a $20 billion grant fund intended to build more rental housing and incentivize local governments to remove barriers to new construction, like zoning laws that prohibit certain kinds of building. Altogether, the White House says all the proposed measures could lead to the availability of 2 million more homes. That's good, because it looks like we're going to need them. If this proposal moves from policy to practice, then its real-world effects will become more clear. But the reality is that this is all a bit of a pipe dream at the moment, as it doesn't appear as though Congress, in its current state, will be discussing big housing legislation anytime soon. Now we turn to you. We value your comments and opinions, so let us know down below in the comments. Would a $10,000 tax credit get you off the fence? Or is this just more hot air out of Washington at a time when politicians need to make a good impression on you during this election year? This is Real Estate Rundown over and out.